I publish the Leibovit VR newsletters. This is our new website. And within the scope of the VR newsletters, we have our various publications, which you see on the screen. Platinum is our daily letter with our recommendations. Silver is our daily letter with just general market commentary. We have my gold letter. We have our annual forecast that comes out every year. That's another product. You'll see a brief slide on that in a moment. We just launched the Vice letter, which is a combination of everything out there, that from alcohol to marijuana. So it's with all the action now in the cannabis sector. I believe there's about 80 or 90 stocks that are cannabis related, believe it or not, out there. Many are penny stocks. We decided to start tracking some of these and using our volume work. There's some great percentage moves in some of these low price stocks if you're interested in that level of speculation. So that's a new product. And we have, of course, my Trader's Book of Volume, which was published a couple years ago through McGraw-Hill. It's basically the definitive guide to volume trading. It's almost 500 pages, includes my volume reversal indicator, but it's the reference work, in my opinion, if you're looking for a work on the volume sector, which is my specialty. It's also released in Chinese recently, by the way, and that's the visual you see up on the screen, another copy of another Chinese version. So when I get to China, I guess I'm going to have an interested audience out there. The question is, however, will I be able to communicate with them? So that'll be an interesting experience when I do get out there, and we do have a lot of interest in the Far East on our technical work. The forecast model is basically a cyclical tool I put out every year. It's a separate product. It's just based on influence to a great degree, but one of my great heroes in the business, Yale Hirsch, and the Stock Traders Almanac. I talk about Yale quite a bit, and there's so many repetitive patterns, and not to say that every year's forecast is as dramatic as the one you're seeing here for 2013, where the projection was on top and the actual results are on the bottom. But the forecast model has an uncanny record going all the way back to 1987 and being able to call the crash. So I put it out every year, and like the weatherman, we look at the short-term indicators as we need to on a daily basis, and this is just a general guide, and it certainly doesn't guide our entire plan, but it gives us a sense of what might be happening on a cyclical basis. Reed was kind of introducing me, but just to let you know, Timer Digest, there's some current rankings for 3 years, has me the #2 bond timer in the country, a gold timer for the last 10 years. It has me as the #2 gold timer in the country. And in the last 8 to 10 years, this is an overall market timing. I'm in the 3rd spot, both in 8 to 10 years. So just to even be on this list, considering the names that are in this industry, is a great honor, considering I've been doing this for so many years and still be able to maintain a decent position. And I think it's because, I focus on the technicals and the cyclicals and try to tune out the news, and that's really what this is all about. This is a little slide of our Vice letter that we just mentioned a moment ago, so you go to our Leibovit VR newsletter to track that. Oh, where did that come from? Okay, we'll go on. Caught your attention there. Ecigs, this is basically one of the Vice areas we're going to be tracking here. A lot of electronic cigarettes and vapor out there. This is a company which is private now, but Jim Cramer was talking about it on CNBC, which will probably go public in the near term. Enjoy. So this is going to be another one of those hot issues when it does come, and we're all looking for the next GoPro or next hot play. So perhaps this might be one of them. That's me on the right, sitting at the marijuana conference. I was on the cover of the LA Times, believe it or not, and inadvertently I was sitting there at the ArcView conference, where you have investors getting together with prospective companies looking to raise capital. So I got a call from a bunch of my friends saying, hey, you're on the cover of the LA Times. So I was running, what I did to deserve that recognition, but I was just sitting at a table, I guess. But it's just a sense of what's going on out there. And I have to tell you, I know you probably think I'm a little bit on a tangent here. We will get to the technical work, but the idea of this business is to try to find the next bull market and find the opportunities. And this is what I've been successful with over the years. And if it's cannabis, if it's gold, if it's whatever it is, you're going to see the volume come in. You're going to see the trading action, and I'm going to follow it. So. This is why I've even paid attention to this and shown you these slides, because it's definitely a growth area. In fact, one of our favorite stocks you're probably familiar with, GW Pharmaceuticals, which might be considered one of the blue chips in the industry, along with INSYS, INSY. We're both up strong today in the market. So these are just two plays in the cannabis sector, and both are backed by by big brokerage firms. I think GW is backed by Morgan Stanley, so you really have to pay attention to what's going on out there. This is just a list, just to let you give you a sense of what's going on. And when I show this to most audiences, they're surprised. And this is not the entire list, but this is a list of current marijuana cannabis stocks that I'm tracking. And you can see, you know, some of the percentage gains. These are like daily returns. Some of these things can move 22, 18, 14, 13% a day. In fact, this is an old list. I think the list from yesterday, we saw some 30% gainers. So and I'm told there's about 200 names out there, and I'm only tracking about 70 or 80 on this list. But you can see some trades, some pretty heavy volume, some don't. But the ones that are strong technically and show my volume reversal patterns and conform to other basic technical guidelines, we certainly pay attention to. Well, here's Puxatani Phil, our favorite forecaster, and you know we had the Groundhog Day just a few days ago. I put this up on the slide when I was up in Vancouver about 10 days ago, and this is an interesting statistic, and it did work out, by the way. In the past 12 years, stocks fell 70% of the time, and we had a 4% decline this year, just up to the Groundhog. So, you know, you're talking and listening to an eclectic analyst. I look at everything, including the Groundhog, and this is an interesting observation we put up every year. This is a chart, by the way, that I did not create. This was created by my friend Jeff Hirsch over at the Stock Traders Almanac. And I agree with this philosophically, though I don't know the exact timing of it. So despite any bearish comments I might have short-term about the market, whatever, on a bigger picture basis, this is an interesting slide, and you should you know, keep it up on your wall. It basically says, you know, the Dow could be headed in the next 15 years up to 35 or 40,000. And the logic behind this is basically, you know, inflation really kicking in here, and a lot of the money that's been hoarded by the banks, where we've seen little or no velocity of money, and you know, borrowing money is still a bit of a obstacle. As this money really comes out and gets to work here, we could see extraordinary gains in the years ahead. Whether we're going to see a couple bear market years before this, as you're seeing on the graph, or some analyst friends of mine think we could take off right away and we can see a huge move. This is just something to keep in the back of your mind. And I have a lot of kids, and my youngest is 17, but putting money away for them, taking whether it's a 2 to 10 year, 15-year perspective, I think is still a safe bet, particularly when we have an accommodative Fed and we have you know, money printing running rampant around the world. So equities are going to be the place and have been the place to be, and this is just a good, I think, a big picture chart of really what's happening or could happen, and I want you to see that. Now, despite that, we're at this point now where we've hit a 7-year peak, and the last time, 2 times we hit a 7-year peak in the S&P, we had a significant sell-off. So we're right in that time frame now. So the question is, are we going to see another bit of a sell-off here? After all, we've had a big bull market here running for several years. I'm a trader. I'm not a long-term investor here, but certainly if we start seeing some confirmation of a bear top, you have some cyclical potential here just based on this one observation about peak-to-peak tops that have occurred here over the last couple decades. So just keep this in mind, and certainly we're not acting on an investment basis yet, but if we do get confirmation, this could be one of those early warnings that perhaps something like this could be unfolding. Of course, at the same time, we've got the Janet Yellen effect. I don't have to tell you too much about Janet. Every time she makes statements, or one of the Fed governors makes statements, you can see on the chart here how the market almost invariably responds to the upside. So this is, just common knowledge, I guess, among all us traders, but it's always good to see a visual reminder that the Fed is very much behind this market. I know Bernanke in recent years was targeting a higher S&P, and there's no question they're in there. So we have the plunge protection team. Many of you have heard about this. This is a working group of financial markets which was signed into law by Ronald Reagan back in 1988. And we have the Exchange Stabilization Fund, which was created back in the 1930s. And we know the market's rigged. I mean, that's basically what I'm saying to you. We know the currencies are rigged. We know that bonds are rigged. So we know stocks are rigged, and it's just a question of a whole new era that we're in the market, and we have accommodative governments that are devaluing their currencies, and you just have to play the game, and we're not going to change it, but this is an important fact for us, and I guess once they decide not to rig or they're forced to stop, that's I think when all the liquidity is going to come out and the bear markets are going to start. But it doesn't appear that's coming in the foreseeable future. But stay tuned. This is a chart that I use just to give you a sense of what could happen. This is basically the junk bond at Fidelity divided by the Treasury bond, and I call it the confidence index. So you're taking FAGIX dividing it by VUSTX, and we're in a little bit of a downtrend here. It means that money is a little bit nervous here, and the strength in the market, as I'm sure you've noticed, has been narrowed down to a handful of issues. If you own Apple computer, you're doing great, and but there's a limited amount of breadth compared to what we've seen, and the market is making an advance here. But this is a little worrisome in terms of this ratio and how it's panned out on previous patterns like this. So along with that 7-year top pattern that I just showed you, these are like 2 early warning signs. Of course, they could easily be negated as the market continues to move higher, and despite them, but these are things that I pay attention to. So let's stay tuned here. And I do expect a bit of a choppy year this year, by the way, even though we net could go higher. So we've got to be prepared for that volatility, which is great for us because we like to trade. The volume reversal, this is my proprietary tool, and we have 3 versions of it, but they're all on these 3 platforms, and I'll put this slide up for you at the end. I don't want to make this a sales presentation, but I know many of the presenters that you've heard today are in the business of selling their indicators. I don't directly sell these. They're through the platforms, and I do share in revenue with them. But if you're interested, and hopefully you will be after you see some of the examples, this is the page over at the Trading App Store at TradeStation. It's $95 a month. At eSignal, it's $99 a month on their platform for the Leibovit volume reversal. You can go to that. And finally, Metastock, they have the same 3 indicators on their platform. So hopefully, if you have interest in using my indicator, these 3 platforms will afford you that opportunity, all in that $95, $90, $99 a month range. So what are we looking at here? I wanted to get a slide up here that showed you the background of these indicators first. So let me just skip ahead here a little bit to see if I probably got rid of those. So we'll just jump in here. Basically, I was going to put up some skeleton charts to show you the theory behind it, but we might as well just jump into a chart just to show you what I'm looking at every day. So this is basically what I look at in terms of a chart. What are you looking at? You're looking at a green line, which is your 200-day moving average. You're looking at a blue line, which is your 50-day moving average, and you're looking at little green and red triangles. And the volume reversal is my trading tool, and what it says is there are more buyers than sellers, or sellers than buyers. And I am particularly attracted to situations like, here's an example, I'm going to show you a few more. This is Smith & Wesson. And when I see a stock come down heavy, as we see here back last September, probably related to news, but also negative volume pattern came here right off the top and told you that it was going to go down. That was my sell signal. But when I see this type of pattern, yes, you play it on the short side, but it also tells me there's a gap that's going to be filled. And once you build a base and you start to get some positive volume, sure enough, it'll come back to that level. So I look for a lot of these, and we can talk about tons of them, whether it's Whole Foods, whether it's Lululemon, whether it's Michael Kors, we can go down the list, Tesla. They break them big, and having been a floor trader and having seen this for many years, I don't believe these things are accidental. I think there are a lot of people that in the business that manipulate the stock prices and the news stories, and this is what this is all about, because many times you'll see negative volume come in before a news story, or positive volume come in before a positive story. Stocks are marked down for accumulation and they're rallied to distribute. So I'm a bit cynical about the motive, but I understand that you have to play the game, and this is what I developed while I was on the floor to try to follow the smart money, so to speak. So what I have here, this is a daily chart. This is the weekly of Smith & Wesson, and you can see what I'm looking at. I have, negative volume. My negative volume reversal is telling me sellers came in right off this level following my algorithm, told you that topped out, and you basically avoided the stock on the long side until hopefully you generated some positive volume. And here you can see here I have 2 positive volume reversals, and sure enough, the stock bottomed and turned back up again. You can be looking at a period of weeks, days before you see a change in signal. And I know it sounds simplistic. You know, there's not 50 indicators up on your screen, but this is what I use. And basically, it keeps me intellectually honest. I'm following the money. If I'm wrong, I'm out pretty quickly. But let's back up a second. How do I actually use this on a very short-term basis? Well, below on the lower section of the screen, I have a very basic stochastic, a 533. It's not carved in stone, but if I have a rising 533 stochastic like you see here, I'm circling it here, this is in January, and I generate a positive volume reversal, gives me a little extra encouragement to get long, and I jump into the trade. Again, it's a trade. I'm in these things, could be 2 days, 1 day, 5 days. You have to make a call based on, you know, any other indicators you're using. I generally try to make a couple, 3 points on a trade and move on. I'm not an investor. And to back up a second, the reason for that is when I was on the floor years ago, the traders that I admired the most are the ones that literally cashed out every day, came home flat every night, had a clear head, no stress at night with positions that may have gone against them overnight or in the morning, and start out every day fresh. So I'm sort of, even though I don't go to that extreme, I'm in the mood to pretty much ring the register as often as I can and look at this business as a way of making a living, not as a way of getting rich. In other words, if you can ring the register in a day or two, move on, just keep moving on, you have a lot of fun, you trade from a position of complacency, you don't put too much in any one trade, and you just go on, and every day is a horse race, and it gets me up every day, and as you all know, obviously you wouldn't be listening to this presentation. It's a lot of fun, and it's a sport, and hopefully it's profitable for you. So that's the reason why I tend to move quickly here, and you can see, you know, some of these examples here where some of the volume reversals you get, you know, a quick 1 or 2 day trade, some move on for several days, but if you have a confirming stochastic, you make the decision. Now I have 3 versions of the volume reversal. What you're seeing here is what I call the sequential version, which shows all the volume reversals. When you sign up at Metastock, eSignal, or TradeStation, you have a choice of 2 others. I'm not showing those here, but I'll just briefly describe those. One's called directional, and that filters out repetitive volume reversals. So if you have a bunch of VRs like here together, it would only show the most recent one. And I have another version called the 2-day, which basically based on the concept that if you have a volume reversal, you tend to get follow through for a day or 2 following that signal. So those are available to you on those platforms. You can look at them. As I mentioned, I tend to prefer this version, the sequential, because I want to see everything that's happening. But some of my subscribers and clients prefer just to use the others because they're a little simpler to understand and filters out some of the noise. Here's Alibaba on a weekly chart, and you can see here, you know, the VR has applicability in just about any time frame. But you do have to look at it. You have to go back and pick up your currency, your other future, your stock index, and see if it's working well for that, and then trade accordingly. But here on the weekly Alibaba, you had a nice positive volume reversal, move up, nice move up to the upside. Here was a positive VR, but we had a declining stochastic, so I would not take that trade. You had nice negative VR here a couple of weeks ago, and certainly you saw some nice follow through. Remember, you're catching this intra-week, and the software flashes these signals as they unfold during the day, so you don't have to wait to the end of the week or the end of the day to see the results. And this is a daily Alibaba, and it's a nice correlation. Some work better than others, but here's nice. You know, there's long periods of time where you don't get the clear signal, and I'm not trading it. But here you got a little negative VR. And this was in the 3rd week of December. You had a declining stochastic. You had a nice trade to the downside. Actually, you could have stayed with this for quite some time, even to the extent of this gap that we saw back here in early February. But I tend not to trade that way. If I get a VR like here and I'm in it for a day or 2, particularly if I get a big break like this, I run like hell, take the trade, and look for another opportunity. I look to this as a gift and move on. But that's a daily one. This is Continental Resources. You're probably familiar with the stock. What's interesting about Continental Resources, it was up today. This is not today's chart. This was about a day or 2 back. Is I'm told they're one of the few oil companies that don't hedge their inventory, so they would have a better response to the upside as crude oil moved higher. So we had the big break in crude oil, and Continental comes down, as you can see here. And I'm looking at that nice juicy gap, saying, well, they're going to come back and fill this at some point, but we need some sense of a bottom. So we got a nice volume reversal here in mid-December, and it started trending up. And then you had another little positive, then you got a negative for a day or two. So either you got out of your position or played it for a day or two to the short side. Here you had a negative, but you had a rising stochastic, so I would have ignored that trade. And then nice positive came in and carried you all the way up here for multiple days. As you can see here, a negative came in, so that would have meant if I didn't sell already, I would have reversed or gotten out right away. But it had a nice little trade for a day or two in there. Another positive comes in. So these type of patterns, we get a two-day play like this, is why I created the two-day version that I mentioned to you a few moments ago, because on many occasions you get a quick trade for a day or two, and I'm happy to take it. So sometimes you get more of an extended move. And I can't tell you when I get a VR whether it's going to run for 2 days or 10 days. In this case, I'm a little more bullish on this stock because of my feeling this gap is going to be filled and crude oil was in the process of recovering. But I generally view these, again, as a couple-day situations. Whole Foods market, as I mentioned earlier, another example of how they kill a stock. And this was on was last May, I believe, or May or June. And they come out with a story that essentially says growth is slowing in the company. And, you know, I thought that was a bunch of nonsense. It's one of my favorite shopping places, has been for many years. I actually travel around the country. Everywhere I go, the first place I look for is the Whole Foods. And I get one of their juices, one of their green juices, among other things. But when I saw this gap, I knew right away they were going to take it back up again. And the question is, this took a few months for a piece to be built. And the positive volume started to come in on several occasions, but when it finally started to move, you know, it filled the gap and has continued strong since. And suddenly the news environment changed miraculously. I wonder how that happens. They hate it here, now they love it. But this is part of that manipulation that I was talking about earlier, where stocks are broken, accumulated, and then taken up again. Seen this for 35 years, so just keep looking for these patterns. And there are a lot of little short-term trades in here. I just blew this trade up just to get you a sense of the overall perspective of what happened and the kind of trades that I look for. So ideally, the ones I really like are these kind of situations where they break them and they build a little bit of base, and then you look to take advantage of them. This is a weekly chart of Whole Foods. So we condensed it here a little bit, and you can see the pattern a little more clearly here where they broke it. You didn't see the gap per se, but the negative volume coming in. But when the positive volume showed up on the weekly, it told me we were probably near some type of bottoming process. And, of course, you had a rising stochastic. So ultimately it did recover, and it was a very clear pattern in terms of expectations, but you didn't have a clear sense of time. Here you had a quick trade for a couple of weeks, but you didn't know whether they're going to fill this gap 2 weeks later or 6 weeks later or 6 months later, but you knew that it was coming, and you trade accordingly. And this is what I did. I was trading it pretty much through this entire period on the long side. Every chance I had, if it pulled back, I'd buy it and sell it, buy it and sell it. Hopefully I'd be long when the big move started to unfold. First, solar, here's another one. They really took this one down. Now it's starting to come back too. You know, basically talking to stock that was in the 80s all the way down to the 40s. You know, got gaps to be filled here. And I've been, you know, we're long this on our VR Trader service. Why? Because you can see all these little green arrows, a lot of positive volume reversals, accumulation is moving up. You have a rising stochastic. So they're going to take this baby back up again, and whether it's going to go back into the 70s or not, that I can't say. But you can see it's above its 50-day, and certainly we're probably going to touch that 200-day in First Solar in the low 50s, and we'll take it from there. Lululemon, another big winner for us. Clear situation again where you had a gap. You knew it was going to be filled, but before that you had a negative volume reversal telling you it was going to come down. Again, this is the weekly chart, so I present this more to give you a perspective of what the stock has done. I pretty much trade it on a daily basis, but this is you know, still a clear example of how that volume led price, and also gave you a good sense that it was bottoming when you start to see some positive volume come in and you see that gap out there. So another case of breaking a stock and then seeing its miraculous recovery. Transocean Offshore, of course, is a speculative favorite now among many of the oil traders. This was an expensive stock that got down to $14. It's got a gap here around the 23 level. I think it got up to about 20 and a half already. So it's headed toward that, whether it goes there straight away or it pulls back one more time before it does. But this is a setup. You got a most recent volume is a positive one. This is a daily chart. So you know, there's still life in rig, in my opinion. But you know, you have to. I mean, in fact, I'm looking at my crude oil chart. My crude oil. I'm not 100% convinced crude oil is going to run to the moon here, but I do have a little measurement up to the 59, maybe the 60 or so level in crude. Let's see if we can get there. Many of the bearish analysts are telling us crude could break again through the 43 low and get down into the 30s. That may indeed be the case later in the year. So we're going to have to, you know, keep our wits about us and trade this accordingly. There could be a nice little technical spike as it's now occurring, and then we'll find crude oil back down again, and there'll be another wave that we could trade later in the year. But at the moment, you know, many of the shares like the Transocean were responding nicely to the volume pattern. And even here on a 2-day basis, you can see here there was a little negative VR you could have traded. Here's a beautiful one here with a declining stochastic. I want to go into a little bit of the theory here very briefly. I didn't do that, and many of you are probably scratching your head how I use this in terms of stops and so forth. The basic rule I follow, besides the use of the 533 stochastic, and I hope you can see it on the screen, but if I generate a, let's go back here, negative volume reversal. As a general rule, my work is saying, well, look, sellers decide to come into this thing, the rally is over. So it really shouldn't rally anywhere. I mean, it really should start moving lower. So what I do is I generally keep a stop at the bar just before or the bar just before that. In other words, where the selling came from, and that is a mental stop for me, okay? Here, let's circle where a buy would be. If I have a low here and I get a positive volume reversal, this is telling me buyers have stepped to the plate and rig is going up. Now, whether it's going up for 2 days, 4 days, that I don't know. But I know that buyers have come in, so I tend to keep a stop just below from where the volume reversal was formed, and generally the bar below. And again, we're looking at a daily chart. So that gives me a pretty good mental stop. I'm out if it takes out that level, and it shouldn't take it out if volume is really coming in and the short-term trend is changing. So between using that just rough rule, keeping a close stop of the bar just before the volume shifts either negative or shifts positive, and tying in with a little 533 stochastic, it gives you a little extra sense of confidence. Though in many instances, if you just go with the VR alone, you can still just trade it. But I found over time these two provide me a little bit of a filter and a little bit sense of extra confidence. Here we are with CBRL, which is Cracker Barrel. This is sort of the inverse pattern. As crude oil came down, the stock took off with the assumption that more people would be spending money in restaurants and traveling more. And as you know, Cracker Barrel's all over the highways. I pretty much missed the move. I've been trading too many other stocks, and I just didn't see this one. But I did notice when it was brought to my attention that we had a gap here around the 122 area that wasn't filled. And I start to generate these negative volume reversals. You can see there's a preponderance, negative, negative, negative. So sellers were starting to come into this thing. So again, I didn't play this one, but this is a good, I guess, textbook example in my work where you're generating a negative VR. You've got a gap down here, so this tells you where it's probably going to go. And you don't know if it's going to happen in 2 days or 2 months, but this is telling you the direction. And even along the way, you did have some nice trades here for a couple of days, as you can see on these negative volume patterns. The sellers came in. Excuse me. So, sure enough, this is about 5-6 days ago. Breaks right down, fills that gap. Not to say I'm a bull on the stock, but when it fills a gap like that, it's probably a little bit of a long trade. I didn't get any positive volume, so I really didn't play it per se, but this was a fulfillment of the negative VR and the fulfillment of the theory that gaps do get filled. And if you have an extended situation, whether it's like this to the upside or like the other ones I showed you to the downside, you certainly want to pay attention to them. Here's Twitter on the weekly chart. As you know, they really took Twitter down, but now they're starting to take it up again, and the stock is really tradable. And you get some pretty good signals here on the weekly chart, you know, positive volume reversal, and it really takes off for a couple of weeks, negative volume reversal for a couple of weeks. Here is just 1 week. Here a positive VR and just trades for several weeks to the upside. Negative VR trades down for several weeks. Now we're starting to get positives in here the last 4, 5, 6 weeks. As you can see, Twitter has been acting better. I don't know if it's going back up into the mid-50s or back to the mid-70s, but you know, I definitely play the volume patterns, and particularly when I see a rising stochastic, as you can see here with the positive VRs, that's telling me that the trend has changed in the stock. And you can tune out the news. I mean, I really don't listen to the news. I'm just looking, other than people talk about it generally. This gives me the ability to be intellectually honest and just say, well, there are more buyers now and there were sellers before, and something must be cooking with Twitter. This is the daily. And you had the gap here back in October, so I knew they were going to come back and fill that gap at some point, and sure enough, we already have. Now we got a little upside gap here, which might be filled, and that would pull the stock back down to about the 43 and a half, 3/4 area. I'm not telling you to short it. I'm just saying that if it did pull back there, that's some place to be looking at it. But nice little trades here in Twitter on the daily chart. I mean, negative VR, a couple of days down, positive VR, 2-3 days up, negative VR, 2-3 days, even a big break here. One that didn't have much follow through here at all. Here you had a nice trade to the upside, trade to the downside. This one only had a 1-day play, here a 2-day play, several days to the upside, several days to the downside, even a day. But these signals come in, and as I said, I could be out in a day or 2 or 3 with these type of negative or positive volume reversals. And I think that pretty much covers the main points that I want to make about the signal. And I'm just reminding you here again that here at TradeStation, here at eSignal, and at Metastock, these indicators are available. And I'm going to see if I have those other visuals here that I put together. I probably, let me see if I can put those up here just to go over the theory with you a little bit. Let's see here if I can get that up on the screen for you. This is basically their theory behind the sequential. Okay, so this is what I want to show you earlier. This is just a skeleton chart, and I'm just going to go over the 3 skeleton charts on the theory behind the 3 versions that are on the platforms. Okay, so this is a sequential. This is what you've been looking at in all my examples, and what we tend to do is count the volume reversals if there's no intervening negatives. But this is just a basic theory. You get a positive VR, and you look for the follow-through to the upside if you get the positives, and if you have the rising stochastic, and if you have a consecutive counting pattern like this, it just reconfirms smart money is at work. The directional filters out the repetitive VRs, so in theory you can get a negative VR like here, and you won't see anything until a positive VR comes in. So in the case of this hypothetical trade here, you could catch a move all the way down if you wanted to. The little brown line that you see here is the stop that I've been talking about a few moments ago, where if you can generate a negative VR here, that high is your mental stop, and we just put this little brown line there to remind you where your stop is. And conversely, if you have a positive VR, that brown line denotes the low of the bar preceding. That gives you a little mental stop there where you would be if you needed to know where you're wrong. And that's what I like to do. It shouldn't change. If volume's coming off a top or a bottom, that more or less that level should hold. And the 2-day, again, this is just a little skeleton chart about the theory. This is what you see when you sign up for the indicator on the 3 platforms. You'll see a positive VR, a little brown line telling you where your stop is, and the little blue dot is your 2-day trade. In other words, you're out in 2 days on the 2-day indicator. You don't care if this thing went 10 days. I guess you do care on a certain level, but you're in this for a 2-day trade. So on the 2-day version, you're generating, if you generate a positive VR, it tells you where your stop is. 2 days later, it tells you to get out. Negative VR comes in. Theoretically, 2 days later, you have a little brown line telling you where your stop is, and 2 days later, you're out. Positive, out, negative, out, so forth through the whole sequence. So backing up to the 3 of the 3 versions that we were talking about here, you're available in the TradeStation, eSignal, and Metastock accordingly. And Reed, it's a little bit early on the presentation, but that sort of covers it. So if we have some questions, I'd be happy to do it. I also have the eSignal up here in the back of the screen where I can actually launch eSignal up here. I don't know if you see it or not, and we can actually put up some real examples too of things that are going on in today's market if anybody has a question. I don't know where I see questions on the screen or not, but if there are any, I'm happy to answer them.
You see the little box that says questions or chat, you would just need to hit that plus button. It should be on that main dashboard.
Let's see here. I'm looking for a little thing here. It says people can see your screen. Okay.
Like right
here.
where.
Yeah, there. Okay. And then questions would be, can you look at STZ? Okay. There we go. Thank you. Let's put up. Wait, this is probably. Here we go. Let's see STZ. I mean, this is essentially what I'm doing all day. There's also another function here which I didn't show you, which is the all platforms have this. It's a watch list. We could actually show you the VRs as they're forming. So what are we looking at here? So this is Constellation Brands, and today there was a positive VR formed. Of course, we've got a big move here or underway in the stock, so I'm not interested in trading it this far up already because, you've got this much of a move underway, but there's nothing negative in the stock other than it's high. And I can see here there have been nice trades along the way, so there's a good correlation here. You don't get signals everywhere, but I did notice here, just scanning it in November, you had negative VR with a downtrending stochastic, and nice trade came in, so there's a good correlation with the stock and the VR. Here in looks like around December 18th, positive VR comes in. You had a rising stochastic, so it was a nice trade there. Here, January, positive VR comes in, rising stochastic. So there's a good correlation here. So this is a good little stock, but as you can see here, it's run to a little bit of sideways congestive action. So I see nothing here, that I would act on here. I mean, it's positive today, but it's already made a move, so this is not one I'm paying a lot of attention to right now. I wouldn't. If it broke big, or the negative VR came in, and I might consider it more of a short here. You can see here there was a short for a couple of days here. There's a long trade here, so for a day or two play perhaps, but nothing other than 1 or 2 day play here. So there seems to be some good correlation in the stock. It's one to look at. Any others? Anybody wants to? I can put up on the screen here. Just keep me intellectually honest here with the VRs. I mean, I put up the good examples. GMCR, okay, that's Green Mountain Coffee. Okay, well, it's a beautiful example of the VR at work. Before when the downtrend started. So you got negative VR right off the top here. You had a downtrending stochastic. Nice break in the stock. Stayed negative. So as you can see, there was some follow through after each of the signals. If you were just looking for a day or two trade, there was a 1 day play here, positive, but it didn't really follow through. So if we didn't see any action in a day or two, I would have exited this one. But it has such a huge bar here that probably you have to catch it early in the day. And if you are monitoring it on a watch list, you could, in theory, catch these things early and be out of them pretty quick. But and then no signals came in for a while. We had negative VR here on January 26th, downtrending stochastic, so you were able to catch a nice move there. Negative VR here on February 4th, but I would not have taken this trade, even though it did go lower, because I had an uptrending stochastic, and I generally try not to do that. I mean, you could have, but it doesn't really fit the bill for me. So here we got a stock that's down from 160 to 108. I'd only be looking for long trades now after this much of a move, so I'd be waiting for some positive VR to come in. We have a toppy stochastic here, so we're going to have to be patient for this one. But it's still in a downtrend, but I'd be looking for some positives on this stock because it's just down so much. ECL. Ecolab. Okay, no signals, no VRs in the last 10 days or so. We did generate a couple here. This was on January 26th and again on January 28th, and you did have a downtrending stochastic. So there was a trade here for a couple days in the stock. I did not get a positive volume reversal off the low, so even though it may have looked like a bottom and you could have theoretically jumped in because you thought it was oversold with the stochastic turning up, I didn't get the volume there, so I would not have caught this little up move here at all. I would have probably played this one here because positive volume came in, uptrending stochastic. The negative VR here I would not have played because I had an uptrending stochastic, so I would have avoided that trade. Here had a nice long trade in the stock, positive VR, uptrending stochastics, you had a nice little trade there. Negative VR here, downtrending stochastic, you had a nice day or 2 or 3 or 4 trade here. And you can see there are periods where you're not getting the volume shifts, so that would not have been trades, but there have been a few in there. So this is what I do. I know you don't see this everywhere because this is not this. Like I said, I've been doing this for many years, and I didn't publish this. I talked about volume reversal. I talked about it in my letters, but I didn't put it on a platform, and I finally did it. And I did it not only because I can make a little bit of money, sharing revenue with the platforms, but because it was easier for me now when I'm traveling. I've got a internet connection to major platforms. I can pull up my signal. I don't have to be at my home computer or office computer to do this. And it also gave me the ability to look at many time frames. In my own software, I couldn't just hit a button. Like here, I can hit a button. Let's, for example, do this with ECL. And I can change it to weekly instantaneously on my own original volume reversal software. I couldn't do that. So here is a weekly chart that I can instantly create. You can see how the stock's really been toppy here with all these negative volume reversals coming in, by the way. And then I can hit a little down button and I can put a monthly chart up, This interesting pattern here. I'm not telling you can trade it on a monthly basis, but it gives you that ability. I can put up a 5-minute chart, which I was unable to do with my own software. Look at this during the day. I get a lot of questions about this, and I don't trade this way, but this is ECL during the day today, and you can see negative volume reversals on a 5-minute chart. So theoretically, there were trades here during the day, a positive for 2, 3, 4 bars to the upside. So you have to test it and look at it and see if it works for you. But this is why I programmed it. So the volume reversal, program for me just gives me a lot of flexibility, and this is pretty much what I do every day. And of course, I don't need one pair of eyes. I do have a watch list, and I put it up here. And I don't know if I could get this to show you an example here because I wasn't set up for the watch list here. Let's see if I can find it here on the screen if I have one. Detach here. I think I had one that like here. This is the kind of thing you would see. Well, unfortunately, I just clicked it off. Okay.
Hey, Mark, don't mean to interrupt, but we are just about out of time, so a little bit less than 1 minute left.
Oh, okay. Well, I'm filling in thinking, Rita, I had to go for the hour, so you're doing me a favor. No problem there. So I just want to show that watch list, and for some reason I can't get it back up here again. But basically on eSignal, you have that option, and you do it on the other platforms as well. You can probably see a little version here at the bottom of the screen where you can put a little pattern up, a little box up, and you can list your stocks, and it shows you the positive and negative volume reversals. And why I can't pull it back up, I don't know, but that's just a function of, there we go. We got it real quick. So here, on the left side of the screen, you're looking at a lot of the cannabis stocks that I'm not touting them any more than anything else, but you can see the way it works here. And this is a daily list of a bunch of names. You can put any stock you want on your watch list, but if a positive VR comes in, the little P comes up, positive VR, and tells you today there was a positive VR in that stock. And if there's a 4, that tells you there's been 4 previous positive VRs in this stock and 2 in this one. But I look for the little Ps because that tells you it's occurring today. So this is how I trade. I put up these watch lists, S&P 500, 100 NASDAQ, cannabis stocks, oil stocks, and if I see the VRs, this gives me the trading signal that something's happening in the ones that I'm following. And Reed, I want to thank you for the opportunity. I thank all of you for visiting today, and if you have some interest, please go to one of the 3 major platforms. Signal. I know you heard Jeff Gibby earlier from Metastock, and he's a big proponent of my VR work, and they'd be happy to set you up on, I believe, a 1-month free trial. So there's no cost to giving it a shot. And thank you all for listening.